Nigeria's Purchasing Managers Index edges up slightly from 48.2 reading posted in May to 50.2 in June. South Africa's Deputy Central Bank Governor says the ability to maintain its investment-grade credit rating is key to stabilizing inflation expectations. Plus, Kenyan GDP growth picks up in the first quarter of 2016. Hello and welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. The Bank of England Governor Mark Carney said the central bank would probably need to pump more stimulus into Britain's economy over the summer after the shock of last week's decision by voters to leave the European Union. Markets have regained their poise after a short bout of volatility following the vote, but concerns remain about the longer-term economic outlook and the potential for renewed turbulence.
All this uncertainty, the three components together, has contributed to a form of economic post-traumatic stress disorder amongst households and businesses and in financial markets. That is, people have become more cautious about their futures and more averse to making irreversible decisions that may be exposed to some form of future disaster risk. Now, in my view, and I'm not prejudging the views of other independent members of the MPC, the economic outlook has deteriorated, and some monetary policy easing will likely be required over the summer. The MPC will make an initial assessment on the 14th of July and a full assessment of the economy, complete with a new forecast, in its August inflation report. In August, we will also discuss the full range of instruments to supply that monetary stimulus, if necessary, the full range of instruments that are at our disposal.
Mark Carney, Bank of England Governor. A ratings agency Standard & Poor's has cut its credit grade for the European Union after the UK's Brexit vote. S&P said the cut from AA+ to AA came after reassessment of cohesion within the EU, which they now consider to be a neutral rather than positive. On Monday, S&P cut the UK's top AAA credit rating, saying Brexit could hit the economy and financial sector. S&P said the change of its EU rating was because the previous assessment was based on all 28 states remaining in the bloc. UK shares have risen for a third day after Bank of England Governor Mark Carney hinted at fresh stimulus measures following the Brexit vote. In Europe, stocks posted slight gains on the first trading day of July as the recovery in global stocks continued despite uncertainties over the Brexit vote. Now let's talk to Javier Arguedas, DWTV Channel's TV financial correspondent at the Frankfurt Stock Exchange. Good afternoon, Javier. Well, global markets seem to be weathering the storm of Brexit despite the uncertainties, and today is the first trading day in the new month. Could you wrap up the market in June for us? How bad was it, and what is your outlook?
Well, what a month it was, Jimmy. It was a really rise in 1 month, and it was, of course, all due to the world-famous Brexit. At the beginning of the month, the jitters were there. People were basically insecure. But as the month progressed towards the referendum date, we saw a lot of confidence in the markets, with investors basically shrugging off the possibility of a Brexit, based especially on the houses that were betting on whether there would be a Brexit or not. And in the end, this was one of the biggest surprises that I've seen in the stock markets when we woke up to this new reality, the UK wanting to leave the European Union, and that caused this enormous uncertainty that we have right now, with a whole lot of question marks that are unanswered and that will probably keep unanswered because we're seeing no action either by the European Union or the United Kingdom. So the DAX, for example, the main German index, has been gaining in the last few days, as you already pointed correctly, but we are still very far away from the psychologically important 10,000 mark. The DAX is now moving way below 10,000, so it is still a big way to go, perhaps in July, until we see a complete recovery.
Now, Brexit has come. And of course, we just saw S&P cutting EU's credit rating last week. It cut UK's rating. Are investors worried about this?
Yes, investors are definitely worried about this because we all saw a lot of predictions that started off last year where you could repeatedly hear and read everywhere that the possibility of a Brexit was the single most important threat to world economic growth. And now that it is here, or it appears to be here, we are seeing that there is a lot of nervousness and a lot of loss of confidence in the markets. If you are a company that were planning to invest in the United Kingdom or was planning to increase operations in the United Kingdom, well, you will probably think twice right now, and that is the big problem. Many companies are putting their plans on hold. It is still not the massive capital flight that you might expect, but it is a lot of uncertainty, and that will probably have consequences in all other major markets. We are already seeing actions, for example, in China, because they are worried about how this could affect the European Union. And let's not forget that the European Union is the world's biggest market if you take everything into consideration. So the credit ratings are dropping, and so is the confidence of investors.
Now, the G20 trade ministers are set to meet in Shanghai from July 9 to 10. With Brexit on board, what do you think the discussions will center on?
Well, they have a whole array of topics as usual. I know that one of the big topics is going to be energy and how energy can be provided to all countries in the world, especially those where the coverage is lacking. But of course, the Brexit is going to be a big topic. On the other hand, if you consider how the situation looks right now, we do not know what's going to happen until then, but right now, nobody can really tell you for sure how this is going to develop. Nobody can tell you.
Oh, we've lost Javier there. Well, thank you so much for your time, Javier. And of course, I know you're moving to Berlin. Just have a wonderful stay in Berlin. We move on now. Asian stocks have risen for a third day running as investors bet that policymakers will take steps to prevent further market uncertainty following the UK's decision to leave the EU. In Tokyo, the benchmark Nikkei 225 closed 0.68% higher, while the Topix gained 0.69%. South Korea's Kospi rose 0.9%, and Australia's S&P and ASX 200 added 0.25%. In China, the Shanghai Composite closed 0.1% higher. Hong Kong and Thailand stock markets are closed for holidays. Well, the International Monetary Fund says the uncertainty over Britain's looming departure from the European Union will dampen near-term economic growth for the UK and the rest of Europe and affect output globally. IMF spokesperson Jerry Rice said market movements following last week's vote, including for currencies, were large but not excessively disorderly. According to him, central bankers should stand ready to act to add liquidity or reduce excess volatility if the uncertainty over the Brexit vote threatens to further hurt global growth.
I'd say Brexit has created significant uncertainty, and we believe this is likely to dampen growth in the near term, particularly in the UK, but with repercussions also for Europe and the global economy. A quick agreement that is prudent and acceptable to all would of course be optimal, but on the other hand, and I want to emphasize the other hand, that rushing to a bad outcome or negative outcome would not be in anyone's interests.
Well, Nigeria's Purchasing Managers Index edges up slightly in May. Details in a moment.